Hello traders and welcome to another video review. Today is March the 1st, 2021. Let's take a look at the Forex calendar to see what is going on, and then after that we will of course do some technical analysis. So let's just swipe down in our economic calendar page and see what we got here. Some data had been published already, like PMI manufacturing data from Japan beat the expectations of 50.6. The actual reading was 51.4. That's a nice bit here. Final manufacturing PMI from China had been worse than expected, of number of 51.3, because the release number was 50.9. So that's a kind of a slight disappointment. And as you can see, there's a plenty of PMI manufacturing data from Eurozone and from the UK scheduled for release during the London session. So there's a plenty of data that might have an impact on a euro market especially, and of course on a pound market. Moreover, at 2 o'clock p.m. there is a CPI and harmonized CPI data scheduled for release from Germany. And as you can see, this is a consumer price index, and the recent reading was 0.8. Now the market participants expect the 0.5% of CPI. So this is a decrease in a consumer price index. So the inflationary pressure is decreasing as well. During the New York session, we have ISM manufacturing data scheduled for release at 4 o'clock. Of course, this is the addition to the Eurozone manufacturing data that will be published during the London session. We got the construction spending data at 4 o'clock. Scheduled for release as well, and then we got but first we got the FOMC members' speeches from John Williams and Larry Brainerd. So as you can see, plenty of data to be released during the London session, some important data during the New York session, and for the Canadian dollar traders, we got LBC manufacturing PMI as well from Canada, scheduled for release 3:30. So kind of a busy day for today. As for Monday, but it's a completely new, different month, 1st of the March. So I think it will be nice to take a look at the euro and pound market, basically maybe on the USD and Japanese yen as well, to see what is going on there. So let's start with the euro to the euro to the British pound. Our downtrend is being continued, but please keep an eye on this pin bar here. It looks like a hammer to me. This is daily time frame chart. So as you can see, this kind of a important candlestick pattern on the daily time frame chart might give us a clue regarding the future movement. Maybe the markets are trying to price in some sort of the better than expected news from the euro and worse from the UK, which is indicated by this up move here after the pin bar was made. But as you can see, the level of 8,739 had not been finished, had not been touched, has not been hit or broken, or something really important hadn't happened to this level yet. We got the pin bar here with a long upper shadow, so that means there is still a pressure on the euro when it goes above 8,700 pips. So it doesn't have a chance to break out of this blue channel, as you can see here. Maybe it breaks for some time, but then the close is, as you can see, even below the open. So the candle is of course red. So the next candle, as you can see, is of course green. It's red. It might be green because the candle hasn't closed yet. So we got like I don't know, maybe around 20 something hours for this candle to close. It trades below 8,671 pips already. So the next target here for the bears is of course the lows. The low of this is 24th of February 2021, and this is our technical support right now. The end of this pin bar is our technical support. It might be very quick move to the downside, but Just because this shadow here is very long, we might see as well some sort of the consolidation inside of this this channel, this blue channel here. So please keep an eye on this blue channel, and keep an eye on this long-term trend line here that you can see. I have marked it on the yellowish goldenish color here. So interesting situation on the euro to the British pound. There is no change in a trend yet, but the market is still undecided which way it wants to go. So please keep an eye on it, because that might be kind of important. Let's take a look on the British pound to American dollar. This is a very interesting chart because it shows us that the market is back to the main channel. So we got this high made on the 24th of the February, and the high was made at 1.4240. Since then, as you can see, long upper shadow, we're going back first day back to the upper boundary of the channel, and then back to the channel. So right now we are trading inside the channel. There is still, as you can see, uptrend being continued. So that's nothing new for us. The next target, I think we should mark this low from the 26th of the February at the level of 1.3888, because if this level is violated, then the level of 1.3758 is next on the next target. It's next on the radar, right? So back to the channel, we have the very nice up move towards the 1.4237. That was the high. Now we are trading back into the channel. Let's just take a look how much we have retraced of the last wave down. As you can see, we retraced 50%. The 50% of the Fibonacci retracement is located at the level of 1.3906. The low was 1.3888, so that's roughly 18 pips. All right, so please keep an eye on this level again. If we break below 1.3888, 1.3828 is the next Fibonacci retracement, 61%, and then of course we might go as well as 1.5758. There is still no indication that this uptrend, the long-term uptrend, had been completed. This is still internal counter trend correction during the uptrend on the British pound to American dollar. And the last one, I think we should take a look at the American dollar to the Japanese yen, due to the data from US. As you can see right now, our scenario that includes ABC pattern to the downside is being challenged by the market participants. So right now we should just very carefully track this Elliott wave scenario. It might be not necessarily the right one, because the wave B correction to the upside is just getting too high, right? Because last high was made at 106.71. So now these levels, 106.23, 105.76 will act as a technical support for the price. The market is clearly trading in the overbought conditions, so you might see a sharp down move, but still the wave C has not been developed yet. Let's take a look at the US dollar index, because I'm wondering if there's any correlation. Yes, there is a correlation. As you can see, the lows of the wave B was violated, and the new local low was made at the level of 89.66. So we should mark this one, but we have a very nice rebound towards 90.92, 91.3. We've been here before, right? We've been here before, and this down move, as you can see, is in 3 waves as well. So this correction to the downside is as well, let's say, A and B and C. Right, so we got A, B, C to the upside, A, B, C to the downside. Possibly we will make right now as the next wave up ABC to the upside, right? Again, which means that would be ABC of a zigzag. So that would be wave W, X, and that will be Y. Or we can make a 5-wave advance, and this correction would be then irregular correction, right? So let's say it would be wave 1, wave 2, wave 3, wave 4, and possibly wave 5, and this whole move will be wave A here, wave B down here, and wave C to the upside as an impulsive wave. So very interesting scenario. Please keep an eye on this. But as long as we are not making any sort of a first 5 waves at the beginning of the move up, there is no chance that this down move, because downtrend, apparently this long-term downtrend is getting terminated, and the market is reversing to the upside, right? So please bear in mind that it looks like this, even despite the fact that no new low was made, because the low of this wave C was 89.66, so the low of the swing low is 89.18, so that's still pretty much higher than the swing lows. And even despite the fact that we are making impulsive wave to the upside, it doesn't mean that the downtrend on the US dollar index had been completed yet. So please keep an eye on 91.03, and then of course highs from the 5th of the February, 91.56. Technical resistance 91.72, and then 92.44. This is only the scenario. It doesn't include the target levels for this 5-wave impulsive advance, potential 5-wave impulsive advance on the US dollar index. So that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Take care and bye bye.